Welcome back, everybody. We've got another great video for you today. We're going to be talking about how you can not only increase your trading profits, but increase your trading consistency by just finding higher probability trade setups. So I've got Lindsay with me again today. Lindsay, how are you?
I'm very well. How are you?
I'm good. Looking for a trade today. It's looking a little slow, but I'm glad to be able to get on with you and go over this. This was an interesting topic that I was just trying to, think about what we could film and talk about to provide value to the trading community. And you said that a lot of your coaching calls have been focused on finding how, or people have been asking you on those calls, how are you finding higher probability trade setups, right?
Yeah,
So
definitely.
I'm thinking today we'll share my screen like I was just saying to you. We'll talk about GBP, NZDs, just how you're using higher time frame stuff to create probabilities. But before we get into that, I'm going to ask you this question that I wrote down last night that I think is a good just start of this conversation. Where do you think there are higher probability trades? Is it in breakouts or do you think it's in pullbacks? Because our two entries are A1 breakouts and D1 are on the pullback.
I think it's a hard question to answer,
tough.
But I'm going to go on my experience.
Yeah.
And I would typically say I trade more D1s. So I'm going to say the high probability setups are in the D1s.
Do you think that the key on both of them, or more so maybe with the D1s, is just being picky? Like, do you think if you took all the A1s, you would still consider that high probability? If you took every breakout, it would still be high probability?
Yeah, because obviously I think like the A1s are so much easier to read.
Sure.
And I think, but at the same time, I think that comes back to your back testing and you going back and looking and seeing the repeatable patterns all the time.
Yep.
They are easier to read. Where with the D1s, it did when I first came into ASFX, it took me a wee bit longer to grasp because it's more in detail, I would say, rather than against
Makes
the
sense.
A1.
I would definitely agree with you. So I definitely would agree. But let's transition into talking about trend, because I think that this is, again, another part or piece of analysis that people go through, but they're trying to decide where is a cleaner trend? What is a cleaner trend? So before I share the screen and we kind of talk through some ASFX language that hopefully everyone will be able to follow, talk us through your mindset on reading a trend. Where does it start for you?
I go top-down analysis. Always have.
Okay.
So I always
start
where? At the daily.
Got it.
And I don't know if that's just because that's just the habit that I've got into and it's always worked with me. I really can't go to the 15-minute and be able to grasp the full picture. So for me, I have to start on the daily. After I've created my watch list though for what we look for in the ASFX system, obviously it's on the 15-minute, but I have to then go to my higher time frame to see, can I bring that in on the bigger picture to say that I am going to follow the trend?
And that's how you're trying to shift. Yeah, because what you're saying, I guess, is so it's somewhat different than me. When I start on the 15-minute, and if I like the 15-minute, then I go to the daily and the 4-hour and the 1-hour to confirm it. But we're both getting to the same endpoint, and we're not pulling the trigger unless we get to at least that point, which is you want to line up the trend on the 4-hour, the 1-hour, the daily, and the 15-minute as much as you can. And that's hard. Do you find that there's often all four of them lined up?
No, not all, especially when you're going from the daily.
Yeah.
So as we know from the daily, you're reading the 8 and the 21 EMA more to give you your bias to then filter down into your 4-hour, your hour, and then your 15-minute.
Mm-hmm. So,
but at the same time, I am still really, when I'm creating my watch list initially, when I come to the chart, I know what I'm looking for on the 15-minute chart.
Right.
To be saying, okay, I'm going to add that pair onto my watch list. Then it's on the watch list, and then I'm going to the higher time frames to bring me in my confluence.
Qualify. Got it. Okay. So let's go into more tactical stuff in just this trend conversation. So I'm going to pull up the daily on GBP NZD. We talked about this, I think, in our last video, where on the higher time frames, I've kind of turned off some of these EMAs, the 800, the 200. You have not. So tell us on the daily, what does this say to you over the last few days on GBP NZD?
That I'm definitely short biased.
Definitely short biased. Based on what? Even with that 800 EMA so close to price action, you're still short biased? Like, where are you making that decision?
Because I'm feeling that, we're below the 8 and the 21 and we are below that 800. And I've seen that price action, when it came down off the 200s, it came down, closed below, it came back to these tests, it couldn't break above and it stayed below.
Interesting. I like that idea. And I think here you're starting to see the confluence as well with the TDI, right? The L50 has been in the sell zone for a couple of days, and that kind of lines up with your EMAs. So here on the daily, you've got your short bias. Is the next step down the 4-hour for you?
The 4-hour,
Let me erase this purple circle. So here, what does this say to you with the TDI position and the EMAs over the last few days?
Still short bias. We've been holding out the 8.
Would you be willing to trade it short even with the L50 in the buy zone 2 days ago? Would you still call it short, or is that more indecisive? How do you label that?
I'm still looking at price action as well. So obviously for the last, like, we're on Wednesday. So in from last week, we've came across
the 8.
It's been outside the 8.
Yep.
So you can't argue with that and say, you know, it's long. We've got to keep the short there when it's outside the 8 like that. And that liquid 50 is falling.
Fair.
Even though it's in the buy, it's fallen.
It's fair. Very fair. So you would still be willing to call it a short bias, even with an L50 slightly in the buy zone. I agree with you. I'm the same way. Okay. Let's go to the 1 hour. Now on the 1 hour last couple of days, do you find that if you get the 4 hour and the daily aligned, that the 1 hour is typically going to align as well?
It's going to usually align,
Yeah, usually. We always want to say usually.
Yeah, usually.
But look at the TDI since last week, like you said, since Friday. It's in the sell zone, and look at it holding that red 21 EMA, you know? So I think at this point, are you still looking at the 800 and the 200?
I'm looking at, so if I came in there on like, say the 23rd, where the liquid 50 was just coming into the sale, it was falling into the sell zone, but that 800 is right there.
Yes.
We do know that price action can come to that 800 and go against
bounce,
for
it
sure.
Could chop.
It could chop. So if I had been at the 15-minute and looking at that, I would still have to take note that 8 is in the way. Depending on the grade you get, you're going to be looking for good risk reward to take you to the 800, lock your stop.
Sure.
But if there was no, I have to say, if there probably wasn't any risk reward to that 800, I would.
You're not taking the trade.
I'm not taking the trade.
I agree with you. Would you be I think what it would do for me at least is probably set me up for more short bias the following day. It just gives you a bias to take forward. Okay, good. So that talks about the higher time frame trend and how we're kind of qualifying some of these higher probability trades. So just to summarize, basically it's EMA position, TDI position, and using the daily 4 hour, 1 hour down to the 15-minute to see how many of those 4 timeframes you can have line up. And if more of them line up, telling you that you're in one direction, let's just say like this one, short biased, then you're going to feel pretty good if you come down to the 15-minute and you start looking for short entries. Now, does this work every time? We always want to say no, of course not. There's going to be days where it pulls back, but I think because we're in a trending market, and you'll agree, I know, Linz, but because it's a Forex, it's a trending market. Maybe not right now because of the election, but normally it's a trending market. More days than not, you're going to make money as that trend continues. Yeah, one day that trend is going to chop and reverse. It's going to happen. But more days than not, you're going to be on the right side if you stick with this. So
absolutely.
Let me transition into my next point about qualifying some of these higher probability trades. Risk reward is something that I think a lot of people don't, it's not that they get confused on risk reward. It's just that it's a topic that everybody seems to have a slightly different opinion on.
Yeah.
We at this point put risk reward at the top of everything. Like no matter how great the technical analysis is, how great the setup is on the checklist, if there's no risk reward, like you were just saying, I'm not taking that trade. It can't be done. So when you try to qualify higher probability trades, do you in your mind say, if this is 3-to-1, it's a higher probability trade than a 1-to-1, or is the risk reward totally separate from the probability of the trade when you think about it?
I think you've got to have the risk reward in your favor, regardless of what your higher time frames are saying. We can all say, right, the higher time frames trump everything, like that is the same. But if you haven't got risk reward to be involved in that trade, I don't think you can pull the trigger on it.
So it almost has to be stuck together. It plays into the probability. I definitely would agree with you. Do you find that a lot of the trades you're taking are at least 2-to-1? Because that's where I find my sweet spot.
Yeah, they are. And I think also, I've been going on the 2-to-1, and you can give me your thoughts on this because it's something I've been thinking about. When, a B setup, we're looking to go to a lock your stop and profit.
Yeah.
Maybe some people are 1.5 before they, take some profit off, lock their stop. Mm-hmm. And I think sometimes we are giving the trade the 2R, but say it was a C setup and we're locking our stop at 1R.
Yeah.
Then would you classify and saying, okay, well, if we can get 1R on this to the divergence, I'm going to take it because it's a C setup?
Yeah, that is an interesting point because if you don't do that, then you're probably not going to be in the trade, right? You're going to stay out of that trade.
Yeah.
I think you're right. I think if you're looking at, this is why having A, B, and C is the biggest change.
It comes up in coaching calls for me because I know that sometimes it's a C setup, but the rules say if I don't get 2-1 on this, I'm not getting involved. But then I said, okay, that's right, but you're locking your stop at 1 hour anyway on a C setup. So why not then just say, if you can get it to 1 hour on the divergence, I'm going to be involved? Because sometimes what happens is it's a C setup, you set out the trade because you can't get 2 hour, but you're locking your stop anyway.
Right. So why not? Yeah.
So why not?
Right. I definitely agree with you. And that's kind of what's happened to me in a couple of my trades recently. I think the Monday trade for us, the Euro CAD trade that really picked up and moved nicely, that was a good trade to kind of walk through that, of moving your stop up as a C setup, because I graded that a C. Yeah. It still continued 1 R, 2 R, 3 R. It never came back and stopped me out until it was well over 6 R. So I think if you're consistent, it's always about being consistent, then justifying a C setup, even at 1-to-1, can still be something that is a quote unquote probable trade. Yeah. But right off the bat, I think we have to, for people that don't trade the same way as us or grade the same way, you have to understand, like, for what we're calling C setups, they are clearly, just based on the checklist, less probable. So you have to also take into account, if it's a less probable trade and it's only 1-to-1, is that something that you need? That's my next question. Yeah, that's it. Do you need that? Because you can wait. There's C setups, like I'm showing you the the Euro CAD trade from Monday. There's 6R in that trade on a C setup. So you can still get great risk reward, which in my opinion, now that we're talking about it, like thinking through this, because it's good. I think if you do have that, that increases the probabilities. It's like, if you have that much space to move, that should help the C setup, just like 1-to-1 would hurt the C setup, you know? Yeah, that's good point. Good point. I feel like for a lot of new people too, where they get hung up on the probabilities, is they're still using basic support and resistance or Fibonacci's and things like that, trying to shift probabilities in their favor with these tools that everybody else is using. And they're still subjective. Wouldn't you agree? These support and resistance zones are everywhere, right?
Well, it's a question I get because obviously they see on my markup that I'll have a line, say, you know, a zone there. And I don't typically use zones because I've never really liked them. It's always been support and resistance lines that I've used using the bodies of the candlesticks. But what I say to them is, I don't physically go and draw these zones until I have an actual setup that I'm looking at, that I'm interested in. And then all I'm going to do is go to my higher time frames and bring more things in Confluence to add into my probabilities. But I'm not drawing the zones first.
Right. Because you're using it. That is, I think, the best way to do it.
And I think that's the best way.
Yeah, just because it's so, you can get caught up. You come from a group that before ASFX, weren't they doing a lot of support and resistance? I think it's just very hard to be consistently accurate with those zones.
I couldn't.
Yeah, it's very tough. So no, this is really good stuff, Lindsay. I think we can wrap up the video here. So for everybody that wants to find out more information on these breakout and pullback high probability setups that we're talking about, I'll put links down in the description for that. I'll make sure I put Lindsay's information down in the description as well. If you want to follow up with her, you can always comment below, but if you want to get her directly, you can find her on Instagram. We'll make sure you guys can get in touch. But I hope that this video helps you guys. I think Lindsay always brings a great perspective when we talk about identifying high probability trades, because she is probably one of, if not the most patient traders that have come through ASFX in the last year. So hopefully you guys are finding value in these videos. And Lindsay, I appreciate you very much for always taking the time and working with me. Yeah, absolutely. We'll definitely get another one done. So thank you, everybody. We'll see you in the next video.
Thank you.